Lots going on in these energy markets and otherwise. I'm delighted to have Peter Maguire, CEO in Australia of trading.com, and Pamela Munger, lead market analyst at Vortex. And hopefully joining us soon will be Jose Shalhoub, and we'll see if we can get him on the line. Peter, let me start with you. Look at that survey result that we've got there, which we ran this week, which is, is the bearishness over in oil markets with everything being priced in? Volatility is the name of the game, isn't it, the last month or two, Peter? Are we going to see things calm down, do you think, in any way on commodities and oil?
Well, good morning or good afternoon, wherever you are, Diala. I'm in Sydney, so it's a good afternoon, but good morning to you in Dubai. Gee, that's a very interesting question. And I was only looking at a vol chart as far as, and we did something only this morning. And when we put our mind back to probably about 2 weeks ago, and we scorecard that 1 to 10 across 14 different markets, nearly every market was between 8 and 10. Now you've got gold sitting at 8 and silver sitting at 2. That a lot of the volatility has certainly been stripped out, as we've seen. So if that's a short answer to your question, but I don't think it's gone away. I just think that what's happened, we've just taken our eye or focus off those particular markets in anticipation of seeing some result coming from President Trump and who's next to, I suppose, fall in line and see a trade deal together. They're saying the UK, this will be announced tomorrow, and their possibility it is the UK. So let's say that that's a tick, and that could actually strip a little bit further volatility out of the market. But if you put going back to the 2nd of April and where it was at the end of April as far as equity markets, we had, we were on a massive run at the tail end of the month. We had 9 straight days of positive gains for the S&P, and it certainly it petered out a little bit, but 9 days straight is just enormous. Oil's continued its downtrend. Gold's had a big rally up. US dollar's still sitting at that 99.5 handle. It's running, the best part of, 99.8. And I think that while it sits under 100, Fed Chair Powell coming out overnight, Diala, saying he won't be rushed. I think that was if there was one statement, won't be rushed, and everything rolls back to that. And there seems to be a lot of momentum at the moment as far as central banks cutting rates. But if the Fed's sitting on their hands, are we going to see something happen over the summer period? And we all understand what President Trump's thoughts are as far as he came out on TV. I couldn't believe what he said about Fed Chair Powell, but that's another comment or another thought. So, he called him a stiff. I mean, it's just, quite open. So I'm not sure where it goes. He says he won't sack him. So again, we're in the throes of working through all of that. You've got a 10-year sitting at 4.29% for the yield. And I'm conscious as far as possibly yields being crushed further to the downside. So that's a long-winded answer, and I'm not sure if it's answered much.
No, absolutely. I mean, what it answers is that there's still so much uncertainty, a lot of movement, a lot of volatility. You mentioned the equity recovery and everything else, and uncertainty is the name of the game. Pamela, good morning. Again, what is that uncertainty doing to sanction to vessel flows and shipping? I mean, again, we've had never-ending headlines of geopolitical tensions, and we've got Osama now joining us, and we'll hear all about the Pakistan-India equation there. But from your point of view, more Red Sea, Bab el-Mandab, some incidents happening again earlier this week, last week, maybe nothing new, but that doesn't seem to be calming down, and yet no support to the oil price because of it. So, we're in Q2 now. What should we be expecting going forward?
Yeah, I guess a few things. So let's start with sort of that bearishness factor, and I think that there's still yet to be seen more bearishness to come. And why is that? Because we're seeing continual downturn in sort of the motor fuel sector, which really drives and underpins that crude price. So we're seeing a downturn in demand that I think hasn't been completely appreciated, because I think there are a lot of hopes pinned on the summer, and that the summer
Yeah.
was going to really be and drive that that oil price up and keep that support there. And what we've seen, what we've seen is a closer move towards contango, kind of in the back end of the Brent futures curve, certainly. And with the recent OPEC announcement, we've seen that the front few months, come down from that backwardation as well. I think it's yet to be seen kind of how much is actually being placed on the water by these OPEC cuts getting unwound in May. So I think that there is still some question marks out there in terms of what's actually going to be on the water. You know, Saudi could burn more, essentially. What incentives do they really have to see prices come down? Not much. So there could be a case where the market is kind of overpricing in some of these headlines, and what we're seeing on the sea really impacts the price, and we haven't quite seen that yet.
Okay.
Now
yeah.
No, yeah, sorry. Just to go one more point. Now we are seeing those flows, those sanction flows continuing to move into China. Just to make a comment on that. I would also say that despite the sanctions on the U.S. tankers bringing in that sanctioned material into China, we've seen actually hit a record high. Imports from Iran, Venezuela, and Russia's northern portion have actually hit a record 2.4 million barrels per day, both in March and April. Stocks in China are very high. So we're still, despite those logistical constraints, we're still seeing China pull in, loads of discounted crude.
Yeah, and not surprising. Why not? It's a good time to buy and stock up. And so even if you look at it on a geopolitical front, it can be a nice way to antagonize its friend, the US, as it negotiates further things. Thanks very much for that, Pamela. Osama, good morning. Thanks for joining us. Good to really have you on today because, some worrying developments in your part of the world. Give us your take on how serious a development you think this is in the latest Pakistan-India exchange of fire. Is it more of the same as we've seen before, or do you think this is a new level?
Well, thank you so much for having me today. Hello, Peter. Hello, Pamela. What is happening right now is, in a sense, unprecedented because previously there were border skirmishes. There was exchange of fire on the line of control, but that was all confined to that Kashmir region, the Indian-occupied and Pakistan Kashmir region. But now, for the first time, the missiles struck just like 35 kilometers away from where I am right now, and that would still be okay because according to them they hit terrorist organizations, etc., etc. But now today in the morning it's getting a little closer, which is a sort of concern. There was a drone attack. It was taken down. There was smoke seen. This happened today, 3 hours ago. So in regard, people have been asking me. So I don't think this is something we have seen before. And naturally, Pakistan will respond to these actions. And that is when it gets tricky, right? So then where does it stop? So I am looking at the international powers such as the US, such as Russia, such as China, such as other countries to intervene. And so far, I do not see any substantial steps in that regard. So it's an open-ended debate at the moment. Will it get worse? I really hope it does not. But it's not looking really good at the moment, to be very honest.
Yeah, no, it isn't. Nothing's looking very good, is it? I mean, you had Modi meeting Trump, and you've got, of course, Xi at the moment visiting Putin for his Victory Day celebrations this week. We'll see what happens and comes out of that. I mean, Peter, just back to you on China in terms of, economy-wise, where you sit not far from China in Australia. What's the latest sentiment on how that economy is doing with the stimulus measures? Obviously, it's dealing with all its trade tariffs, and a lot of people saying course, it's suffering, but it's kind of also got the upper hand with the US in a way at the moment. Still a lot to come, but sentiment in the Chinese economy as we sort of are midway through Q2?
Well, we saw a rate cut, only just a small rate cut during the week, Diala. So there's the first sign as far as trying to stimulate internal demand and make it easier for borrowers, and we won't be surprised to see another one possibly over the next month or 2 months. The unknown hanging over their head is naturally the tariff situation. And what's the story going to be there? Also, Iranian crude, and whether there's going to be the export-driven model is going to continue as far as demand, or is America going to be very aggressive with manufacturing and bringing all of that back home? And how quickly can they turn that around? So
not quickly at all, by most accounts. I mean, that's a multi-year.
Well, that's what they're saying. But we've still got a president that's two presidents that have both got possibly differing views, and that's still a work in progress to see how that all transforms or transpires over Q2 and Q3, leading into that summer period, where we run from commodity prices. And when you're thinking about, iron ore and so on, it's still fairly soft.
Somebody was telling us that iron ore was giving a bit of a boost in China recently in terms of stocks and pricing and supply there. We've had one of our commentators saying that was a positive sign, that, contrary to what's being said. Does that tell us anything, really?
Well, I think it's going to be, their appetite probably hasn't waned too much, but certainly price is not where it was going back, to those roaring days of close to 200. But yes, it's still very, very strong for our demand here, and which is a good sign for our internal engine being Australia from an export-driven economy. And we don't have any manufacturing here, where our claim to fame is selling commodities, and certainly to our biggest trading partner, which is China. So we want the Chinese engine to continue to spiral up, not spiral down. And where that again is going to be the work in progress from President Trump meeting with the Saudis next week, President Xi going to Russia. It's again, there's a lot of unknowns that are going to be worked through this. You listen to the likes of Peter Navarro, you understand where Scott Bessent is, and I think that's the Treasury Secretary. He's in Switzerland this weekend.
That's right.
So again, it's hard to work through this and see what the context is going to be as far as demand picture, because there are so many unknowns. I mean, you're hearing the stories that are, Chinese ships, or the ships with Chinese goods will be landing in LA soon in the harbor there, or, on that California coast. And you've
half
got
empty.
Half full. So again, what's that going to impact as far as the shelves and the consumers in America? This is unprecedented, and again, working through unprecedented, it's hard to draw a line in the sand because you don't know where the tide's going to be.
Yeah, absolutely. Very uncertain. Thanks, Peter. Pamela, I mean, let's talk about Russian oil flows a little bit, because, of course, in parallel, we have, Russia-Ukraine talks that have been on and off for the last few weeks, really. That pendulum continues to sort of swing back and forth with mixed signals from the US in terms of even how it's approaching, trying to mediate there. But I mean, any impact on Russian flows in the last month, the forward looking for that, even within the OPEC context? You mentioned OPEC at the beginning in your first comment, and what might be pushing their policy there. But again, where does Russia stand, do you think, today on its exports, for example, into India and stuff? Does that still continue as it has been really in the last few months?
Yeah, I mean, I think so. If we look at Russia as a whole in terms of crude exports, we've seen a somewhat of a declining trend, but we think that that's probably has to do with field maintenance, getting parts and things like that aren't happening. So you have seen somewhat of a trend, but all in all, they're still getting their crude exports out. Now, India has been purchasing less because they have been adhering to some of the vessels that have been sanctioned by the US, and those haven't been able to stop in the US ports. And that's really impacted some of those Urals moving to India, so that specific grade. But again, the exports still continue to China. And what we've seen is those vessels react and move to take the ESPO blend crude over to China, which is that more desired grade. So again, really still, there was a month of delay trying to readjust to these constraints with these vessels being sanctioned by the US. However, those have really been worked around in various ways.
And I mean, also the other part of what we've seen with the oil price dropping in the last few weeks, of course, that price cap has impacted, hasn't it?
That's right.
And that has impacted shipping, vessel availability, demand, and what can be on the water. I mean, with more sort of non-sanctioned vessels now taking that load, right?
That's exactly right. And so you've seen more kind of Greek operators moving into that pool, which of course is still working to get those exports out. So that has been one of the main workarounds. Absolutely.
Thanks, Pamela. Osama, what's all the mess that's happening with Pakistan and India doing to what was already a very low confidence in Pakistan's economy in terms of, IMF lending and the next tranches of where that's going to come from. And every time Pakistan seems to be slightly getting on its feet, some spanner is thrown into the works, isn't it? Will this be a big setback for Pakistan's sort of debt offering, if you like?
Yes, we have already seen the stock market dropping 6,500 points yesterday, and today as well in its opening sessions. Pakistan's stock market was one of the best performing markets in the world in the previous few months. Plus, we are under the IMF program. We had a second review, so that is certainly going to create further problems. The budget is very near, so I don't know, because the defense expenditure will go up after this. It may compromise the PSDP, the Public Sector Development Program. But what is helping us in these tough times is essentially the lower oil prices, right? And that is where we connect the dots with the domestic needs and the international market. So right now, the price of oil is a cause of concern for the oil producing countries, but it's quite amicable for Pakistan and the people. I expect oil prices, as Pamela said, to remain in the bearish territory for the next few months. I mean, they can really go down into the lower 50s, depending upon if China continues to build up its inventories or not. So I think that would help us provide some sort of cushion. But if things escalate, we're looking at a daily expenditure of, I don't know, $250 million. Conservative estimates, and that is definitely not a thing that a country already in an economic crisis would want.
Absolutely, Osama, thank you. Peter, let's talk a bit about sort of the trend of capital flight, possibly, from US markets. I mean, US, first of all, currency changes. I mean, the US dollar is holding steady, as you just said, for this week. But I mean, again, the trend that it's weakening, and it has weakened, let's say, against, for example, currencies like the euro and the pound the last month. But just generally this sentiment of, the run is over, really, more or less, for US equities and markets, and we are really shifting focus to, countries like Pakistan, India, Asia going forward. I mean, more of a medium-term trend I'm talking about. But do you think that corner has now been turned with all this precedent set by Trump and what uncertainty he can cause?
Well, if I look at, I'll answer it probably the first way. If you're looking at the Dow, it hit a high of 45,073. It's currently sitting at 41,100. So it's only 4,000 points off, and 10%. The S&P's probably 10% off, and so is the Nasdaq. Nasdaq's actually less. So it's a bit more. It's about 15%. So yes, there's been certainly a correction, and I think in a lot of ways it was probably overheated and overcooked. And if you're looking at the core, the S&P and the Nasdaq, they were certainly very AI centric, and those big monster stocks really drove the Nasdaq. And we can't take our eye off that. So the Magnificent Seven and so on. Where it runs from here, capital outflows and that US dollar coming under further pressure to the downside, and if Fed Chair Powell was to cut in the July period or August in that summer, you would only expect, if it was 25 basis points, and if there was to be another one, then the market possibly would get ahead of itself, and that would be priced into possibly a 98 handle, if not 97 handle, as far as softness for that US dollar. So there's going to be further softness, I think, for the US dollar in the short to medium term, really to possibly the end of the year. And it's very hard to speculate what's going to happen in 26. No one can really speculate what's going to happen in the first half of 25, let alone what's going to happen in 26. And then where do those funds go to find return? I think currency's been a big point. The gold market has been very strong with central bank buying. We can't take our focus off that. And I'd love to hear Osama's views as far as retail land, and India and Pakistan are huge buyers from their population to buy. And where you sit in Dubai, everyone's gold centric. So there's the next part of it. And then where does that take from a market sentiment? Are we going to continue looking to the likes of emerging markets as the gateway to prosperity? And, you can't say that India hasn't been an almighty charge up. And I think its best days are ahead of it as far as infrastructure and build and population growth, and Pakistan, very similar, is going to have, wonderful decades ahead as far as huge growth. So maybe the focus is going to be very much on those new frontiers as far as, Asia zones outside of China, and, leading into India and Pakistan and other parts of Asia, Diala, and Africa, of course.
Absolutely, yeah. Pamela, let's talk a bit about, I know it's not specific to shipping tracking, but what ships are telling us about what's happening on with non-OPEC production, particularly the US. We've seen sort of rig counts down. Of course, the oil price is down, and so the whole talk of, well, is the Permian even economical at these rates, and is it worthwhile? I mean, are we seeing any sort of indications with oil coming out of the US as to whether that is being impacted by these lower prices?
I mean, certainly what we have seen are kind of, I think, lower than expected exports out of all of the Americas. And that does include the US to some extent. I mean, it's not a huge amount, so it's, but it has softened. It hasn't kind of hit those really big highs that everyone's expecting throughout this year. And I think that that's probably somewhat mitigating the possibility of higher barrels coming on the water from OPEC. Yes.
And what about Venezuelan flows? Because we had, of course, one of the tariff threats or steps that the US took was, if anyone imports Venezuelan oil, we're going to put 25% tariffs on you. Is that taking effect yet from what you can see?
No, not really. I mean, in terms of the US is importing less crude from Venezuela because of the revocation of the license, of Chevron's license. So, or the likelihood of. So we have seen this month, it's the first month where we are seeing lower volumes coming in from Venezuela into the US. And then, however, those volumes are being made up for by higher imports from Mexico. So that's the only thing that we're seeing currently happening in terms of those retaliatory tariffs.
Okay, thanks, Pamela. Okay, there's our survey for today that Trump's visit to the Middle East later this month will result in concrete steps towards achieving an Iran nuclear deal. A lot of commentary that the US wants to do, wants this to happen. They want to avoid military escalation, certainly, and Iran, being apparently open to this under its own terms as well. But will we see progress? A lot of people saying, well, why is Trump coming now to the Gulf, and what's going to be on the agenda? And that is, as part of the big puzzle, meant to be something that is expecting some steps to be taken there. So agree or disagree, will we actually see any concrete steps beyond what we've seen already coming out of that? Osama shaking his head. What do you expect from Trump's visit to the Middle East, Osama? I mean, from the Pakistani perspective, maybe he'll also try and take one more step to resolve what's happening between you and India. But again, what's the sentiment there?
And before I answer that, I would just briefly like to also talk about what's happening with the US production, if that's okay.
Yeah, of course.
We track the US production in our frac spread count, which sort of also is corresponding to the rigs. That is down by 54 year-on-year basis. But when we look at the frac job count, that refers to the actual number of completions happening in the shale patch. And that, interestingly, is so far stable. So it's down by 5 week on week and almost the same year-on-year basis. So if the price of oil is lower for longer, then we might start to see the efficiency gains in the shale patch start to feel the pain, because the gains can only hold on for long enough, and that is where we might see a little bit downward direction from the US production. Now, coming back to your question, with Trump, there is one word, if there is one word I would like to associate him with, is uncertainty, right? And he considers himself as the deal maker, etc., etc., etc. But the world is in a totally different environment. We have seen that sanctions, the enterprise of sanction is now not as strong as it used to be. Granted, the flows of Russian oil has come down, but we look at Kepler's recent data, India's imports of Russian oil has gone up 2.15 million barrels per day, if I'm not mistaken, reaching May 2023 high. So, the world is now being driven into Eastern Hemisphere and the Western Hemisphere. So there is a lot of optionality for countries. So it becomes tricky, you lose that bargaining power you have in the form of sanctions and other tools, economic tools. So I don't expect anything substantial or significant coming out of this visit. And hopefully Trump in the morning said today that he is willing to help to reach Pakistan and India some sort of rapprochement. Let's see what happens.
Yeah, which he's trying to do that with Russia and Ukraine as well, and of course in the Middle East, which there's been no success there. Things are getting much, much worse. Peter, just back to you, perhaps, just as we start to close up, and we mentioned, Pamela was mentioning, backwardation and contango, and a lot of commentators this week saying we're shifting into that contango in oil markets, and of course that is one big no-no for OPEC, isn't it? Which, its main thing has keep things in backwardation, and yet it's been adding this oil. Maybe we haven't seen it all in the water yet. But do you think that we might see those sort of doubling down of volumes start to reverse if we go firmly into contango? And do you think that is kind of still would be OPEC's primary aim in terms of how it's managing the markets as much as it can?
I think that from an oil trading perspective, and we cover retail, I truly think that you're going to see continued softness over this summer period. A
lot of people are saying we could see $40, despite the fact that it's usually a stronger quarter. Absolutely.
And you guys ran a poll the other day, and I actually voted on it, and I actually said $40. And you saw when it came up, the polls were very, very loaded at that $40 handle. So I think that there's further downside. I feel as though that I'd love to be a fly on the wall, considering the meeting between President Trump and I would suppose MBS early next week, and what's going to be transpired there, and what action is Russia going to play in this, and where does it all go as far as oil production, and is this going to be just the first part of this, as far as an increase in significantly more larger production numbers? And are they looking to really get inflation under control globally? What's the story? It seems to me, I've got a mind here saying, is there a larger agenda at play here? Is the situation to get inflation down in the States, inflation down globally, and as President Trump, is it a carrot and stick, what he's doing with OPEC? And what he's doing with the big guys? His relationship with Putin, I think, is fairly strong, and certainly with MBS is very strong. So is he going to the deal makers to say, we want to see softer oil from here? And, if you want to buy our products or want to be in our market and you want to be associated with the US, then I'm running the show. I don't know.
Well, he's certainly achieving the softer oil target, if that is indeed what's been happening. A lot of people this week saying that of all the things that is sort of pushing OPEC to do what it's doing, it is about keeping the US pleased, at least, with the fact that the direction is downwards for prices.
Yes.
And this whole talk of sort of internal discipline, it may be a nice byproduct, but that's not really what's going on. As you said, what is the bigger picture here that's happening? Thanks, Peter. Pamela, let's close off perhaps by just going back to you. You know, on that point of sort of OPEC plus, what would you say has been? I mean, we had a poll earlier this week saying what is the main incentive, you know, behind at least the declarations that volumes are going up, even though they haven't appeared yet on the water. You know, is it geopolitical? Is it internal discipline? And is it back to this sort of market share scenario after having sacrificed a lot of volumes, you know, for non-OPEC supply? What would you say? What would you put your money on? Would be behind that as an incentive?
Yeah, I mean, I think there might be, of course, a multitude of factors, maybe to kind of steer clear of the attention of the U.S. administration, you know, who have asked kind of publicly to target lower energy prices. Perhaps it's also to lower prices, which would curtail, of course, investments into the U.S. shale supply.
Yeah.
That's a possibility. Also, as you said,
That's
it
that's a Saudi incentive, obviously, not a US incentive.
Yeah, exactly.
The US,
and also it could also be an internal yes, on compliance needs. So that could also be another incentive. Yes, and it could just be supporting oil demand, of course. You know, when you know the economy is slightly expected to go into recession.
Yeah, we'll see whether that when and where those oil lower prices actually trigger more, you know, a recovery in demand. We haven't seen that yet, of course, except for maybe Chinese buying and inventory stocking. So still all to be seen. Thanks so much, Pamela. Thanks, Peter. Thanks, Osama, for joining us as well. Hopefully, peaceful vibes will prevail where you are and where we are, even here in the Gulf as well, in the Middle East. Everybody, thanks for joining us. There's the result so far of that survey. 70% disagree, and I would probably agree with them. So thanks so much, everyone. Have a good Thursday and all the best.
Thank you, Diala. Bye,
Thank
Pamela.
you.
Here's Osama.